Hello, this is Brian Resney, President of Resney Wealth Management, bringing you an important update about the economy and the investment markets. Well, we're firmly into the fourth quarter of 2023. A lot of what I've talked about all year is inflation and how we felt, and from our research, inflation was going to abate greatly. Last week, as you received, I sent out an email to all of our clients talking about the PPI and the CPI, and just generally speaking, how inflation has really come down from that 8-9% level just a year ago. So we've been spot on our research, and by being spot on that research with inflation, we were in the correct areas to be invested for 2023. I still firmly believe, of course, volatility is normal, so don't think volatility is going away, but the key is being invested properly this year so we actually made money for our clients, and I think end of the year potentially could also be good. As we get into 2024, inflation's abating. We're going to be at a point where the Fed is going to start cutting interest rates because the economy is clearly slowing. I don't see a recession. I don't see a big fall off, but we're seeing the slowdown that was needed of economic growth in order to really combat this inflation problem that we've really had for about the last year and a half to almost 2 years. So again, inflation's in the right direction. If you look at the trending inflation year over year over the last month or two, we're running close to that 2 to 2.5% range, which is kind of within that Fed target. We've seen a slight, and I mean slight, uptick in unemployment claims, just slight. This is normal as the economy slows a little bit from more lofty levels. That doesn't mean, again, that we're going to go into a deep, dark recession. And recessions, by the way, are often only about 12 to 15 months long on average. So even if we got a little bit of a pullback in the economy on GDP and it contracted 1 or 2%, this often is short-lived, 12 to 15 months. But what we are looking for is really greener pastures the next 3 years. We're going to be making a few portfolio adjustments, especially on the bond side. As I feel interest rates have already peaked, we're going to start layering in for certain clients, not all, based on risk profile and model, more intermediate to longer date bonds in the portfolio so we can capture a little bit higher dividend yield or interest income yield, but looking for that total return. If rates do come down, we have a chance to make capital appreciation on those intermediate and long dated bonds, meaning we'll slowly migrate out of floating rate or short term in areas that will give us a little bit more opportunity for you, the client. As always, research is vitally important. We spend a lot of time and a lot of money on research, and we're looking at things every day. We may not make adjustments every day because we don't need to. We're going to make adjustments when necessary and when needed to a client portfolio. And as I always stress to every client, remember, every year is not going to be up 10 or 12 or 15%. You could have a year you're down 10 or 15%. You could have a year that's kind of up 1 or 2. It's the nature of investing. But if you average things out over a 5-year rolling time frame, investors tend to be very, very happy. Because over that 5-year time frame, you'll usually get a couple really good years, a couple decent years, and maybe one flat to down year. And again, short term, looking at your portfolio, what it did last quarter and the last year is really nothing more than really mental madness is the best way to put it. Your portfolio and the way that you're going to make or have the opportunity to make an above average return is over that rolling 5-year time frame. We look at 3 years, but realistically that 3 to 5 year time frame, as it rolls, remember, you go up 4 or 5 steps, you come down a step or 2. That is normal when it comes to investing, regardless if you're more conservative or you're more aggressive. Going up a few steps, coming down is normal in the investment process, and really is the opportunity that gives us to add to positions that maybe were oversold and actually beef up that portfolio in general. As always, if you have any questions about your portfolio, any concerns, please call the office. Let's schedule an in-office review or a phone review. Either one is appropriate, and we want to make sure that your questions are answered and that you're completely happy not only with our money management, but our client service and communication. Have yourself a safe and profitable day.